in order for these ride-hailing marketplaces to perform well, for their flywheel effect to take place, that supply piece is critical. The Ubers and the Grabs and the Bolts of the world are very good at building the marketplace infrastructure, the technology behind it that drives demand. The supply side is heavily operational for a player like Moove to take on that role in a way that ensures that that supply is then met is, I think, one of the reasons why we've carved out a very unique niche. I think recognizing actually the supply problem exists in so many places, it exists globally. We knew we were going to be a global business, so what do we need to do working backwards to get there?
Today's guest is a super special one who I love spending some time with in beautiful but rainy London. Tingting Peng, the Chief Transformation Officer at Moove, an African-born global mobility fintech that provides revenue-based vehicle financing and financial services to mobility entrepreneurs across ride-hailing, logistics, mass transit, and instant delivery platforms. We talk more about it, but to get a sense of the scale here, Moove is one of the largest providers for Uber, invested in by Uber themselves, alongside big names like MUFG, Mubadala, Speedinvest, and has raised $250 million in equity, $250 million in debt, and this startup is helping those typically excluded from the financial ecosystem gain credit and in turn build their own future. As a first senior executive hire, the insight that Tingting shared was just pure gold at every turn. We cover everything from building global, the intricacies of co-founder dynamics from a senior executive's POV, fundraising, and so much more. Super tactical, so you need your notes app out for this one. Hats up, of course, to Speedinvest, who allowed us to film this episode in their offices. And with that, enjoy! Moove on Billion Dollar Moves. This makes me super happy. Tingting, so excited to be with you here in Speedinvest's office in London. How are you feeling today?
Feeling good. Before we get started here, I like to start with a little bit of rapid fire. So billion-dollar questions just to get us warmed up. All right, I'm ready. Money or power?
Power.
Fame or fortune? Fortune. What's a book you still hold on to and read again and again? Think Again by Adam Grant. Favorite, mantra from Think Again? Favorite mantra, be willing to rethink and challenge your assumptions. Question everything. Fill in the blank. Success is? Success is being happy and aligned in who you are, what you do, and your values. Failure is? The privilege to learn from lots of trials and errors. First job you got paid for. So not out of university, but the first job ever you got paid for. I tell my kids this a lot. I was 13 and I was a cashier at Wilson's Farms in Lexington, Massachusetts. What did that job teach you? I loved numbers as a kid, so I got to play with the very old school cash register, which is very exciting as a 13-year-old, but how to deal with people, customer service, dealing with difficult, challenging situations, and being very detailed and counting your pennies at the end of the day. We had to reconcile our register with the amount that showed up at the end of the day. And if any money was missing, there'd be a problem. So what's the most used app on your phone right now? It is Spotify. Really? Yeah. What keeps you up at night still? I want to be a good parent. I want to be able to provide the opportunities for my kids beyond what I had. And I want them to be happy. What worries you most about your children's generation? Lack of exposure to challenges that can build resilience. What is your crucible moment? Had many, I think, throughout my career. First one was probably 2009 during the height of the global financial crisis when I got laid off from a high-flying hedge fund job. And I was forced to find myself and kind of figure out who I was and what I stand for. And then again, during the COVID pandemic, kind of rethinking what it is that I want to do, what's my purpose in life, and how do I find fulfillment in that transition, which ultimately led me to Moove. Well, that's a perfect segue into what led you here today. So you, as we were chatting earlier, you've definitely had tick the boxes for, that finance career, spend your time in the hedge fund, did your mandatory 2 years with Morgan Stanley. So very much in banking, asset management, finance, but then you find yourself today a lot more hands-on with Moove. Tell us a little bit about, I guess, that pivot in career at this stage and what brought you to this important work that you're doing. Yeah, thank you for the question, Sarah. I have been thinking, reflecting back on my 2 decades of work, what is the thread that connects all the dots looking backwards, right? Because at the time, and I've done lots of different things. So as you said, I went from banking to the hedge fund world. Then I took a bit of a detour, as I mentioned, when I got laid off from a hedge fund. Became a yoga teacher. Accidentally, I signed up for a course because I wanted to learn more about yoga philosophy. It helped to keep me sane during my days in finance. Ended up becoming a full-time teacher. I ran retreats. And then I went back into the corporate world within asset management and real assets and real estate. And then I went and did executive education because I was passionate about exploring the intersection of social enterprise, government, and corporate. That was my 10 years in Hong Kong. And then the past 10 years here in London has been working for the UK government, bringing Chinese capital to regen projects here in the UK. Then it was raising money for real estate managers. Then it was private credit, and then ultimately Moove. And I was like, what is that thread that connects all of these experiences? And ultimately, I have to sum it up. In my 20s, I was driven by my heart. Yeah. You know, I wanted to have lots of experiences and go on these adventures. And so I didn't prioritize status or money or titles. I wanted to prioritize experiences. And looking backwards now, actually, I think that was probably the right thing to do. I have lots of stories. And then in my 30s, I've learned this word recently. It's what's called skill stacking. So I did start to think about how can I improve or accumulate or gain new skills and experiences that would make my previous or existing set of skills and experiences even more valuable. So building on the foundations of a financial skill set, an investment skill set, what other quantitative, qualitative soft skills can make that more valuable? It's stakeholder management, communication, a lot of the soft skills. It is sales without being, salesy. It is being able to evolve and adapt and be resilient in different types of situations. It's having that ownership mentality. So I think that's been the thread, I guess, through the decades. And then to talk specifically about how I ended up at Moove, it's actually very serendipitous. And I do believe in the power of, intentions and setting out intentions in the universe. And it was ultimately during COVID. I still remember towards the end of 2020, I thought to myself, I really want to do something meaningful in my next role. I want to leave the planet a better place for my children than when I found it. And what are some of the things that I care deeply about? So one was having a role that would enable me to have significant impact directly. And I felt being in investment management, you're still quite far removed from being able to do that. Second was I wanted to pivot into tech. I've always, enjoyed being on the periphery and kind of outside looking in, but I've never been in tech. And so I thought it was now or never. And then finally, having spent a decade in Asia working across emerging markets, I really wanted to go back into emerging markets. And Africa at the time, being based in London, felt like the most sensible next. So it's those three things that I kind of set out as an intention into the universe, started having conversations. And, as luck would have it, a friend introduced me to my now co-founders at Moove, and we've been working together ever since. You were essentially the first executive hire of an African-born fintech startup that is now, we were counting sort of the athletes from, of course, capital raise is a measure of success, not the only one, but 250 million in equity, 250 million in debt, impacting, like 30,000 at least customers and growing globally. Tell us a little bit about your decision. I mean, you could have chosen for tech, and yes, you had your criteria, but there were many other tech emerging market players for you to work with. There must have been something in the conversation with Ladi or Jide that made you feel this is the one I'm going to spend my time in. Obviously, we had lots of WhatsApp conversations back then, nothing in person because, we were locked down. I was locked down here in London. They were locked down in Lagos. And so our initial conversations were all via either WhatsApp or Teams. And they'll know this. I'm going to tell this story and everyone laughs about it. But essentially, the very first conversations we had on Teams, they would never turn on their video. And so I had this big question mark. I'm like, are these guys real? Because I don't even know what they look like. Yes. And ultimately, when I agreed to join them to work on our first major project together, which was our Series A fundraise, The biggest question that I had was around who they are as people. Can I work with them, right, so closely with them? And I did work really closely with them, attending all the investor meetings, doing all the DD. I really enjoyed it. Really enjoyed working with them. Ultimately, I ended up meeting them in person, which kind of helped me to come to terms with the fact that they are real people and they're good people. But then the second area of diligence was around, is this a big enough business opportunity? Is there a market, right? And having not spent any time in Africa, I couldn't really validate that, not being on the ground. So I put a few calls in to a few of my friends who are in the VC ecosystem who had either done deals in Africa or were just a lot more well-versed in terms of that diligence process. And both of them came back, saying, Tingting, this is a rocket ship. And if you have the opportunity to join, and ultimately they both came in as VC investors at our Series A. This is DCM Ventures and also Palm Drive. And that also validated for me, speaking as friends, that they saw the same potential that I did. So I definitely kicked the tires. I definitely did my diligence. But ultimately, it was the right time, the right opportunity, and also the right people.
So when you say the right people, I think because this is important, especially as it was 2020 when they were actually getting started. I guess if you can speak to the founder archetype that you were looking for, leaders that you would invest your time in, what would those three qualities be?
So it's interesting because it's two of them, right? So it's Lottie and Jide, and they're very different. Although I'll caveat that by saying I made them take a personality and Myers-Briggs test recently.
My kind of girl.
And actually, we're all the same, more or less. Like we're pretty much all, we all came out the same. Maybe the only
All three of you are the same personality types.
The only difference is two of us are more extroverted leaning, and one is more introverted. But
So ENTJ, INTJ.
Yes.
See you, girl.
Wow. Very good. Yeah. It's amazing, right? I think they come with very different skill sets.
What was their background?
So they're both British-born Nigerians, and they had known each other for many, many years before founding Moove, but they met as undergrads when Jide was at LSE and Lottie was at SOAS. Lottie actually ended up dropping out and became an entrepreneur. He moved to China. So we connected the dots and we found out that we were both in Beijing. I was studying and he was running his alcohol distribution business at around the same time. So he's been a serial entrepreneur his whole life. He's worked across multiple continents, across multiple industries, ultimately ended in Nigeria because that is kind of where his roots are from, and he wanted to go and build businesses there. Jide, on the other hand, post LSE, went to join Goldman Sachs and join their prop desk. And so he spent about 8 years there, then went to business school at MIT Sloan, then joined McKinsey. And I think it was through McKinsey, their healthcare practice, that he ended up in Lagos. And two of them reconnected. And Lottie, being the serial entrepreneur, was like planting seeds in Jide's head and convinced him to partner together to start building businesses in Lagos. And ultimately, I think, they share, despite being, very different paths and also quite different personalities, I think they share a passion for creating shared value. So I think some people know this, many people may not, but Moove isn't the first business they built. So they built 3 other businesses in Lagos before that. 2 are in the healthcare space, a chain of walk-in clinics and a chain of pharmacies to serve the base of the pyramid. And they also founded an outdoor advertising business in Lagos. And so I think it was the combination of having done that a couple of times in as challenging a market as Lagos and Nigeria, and then also recognizing that technology would enable the creation of the next kind of generational leader. And so they started thinking about what is the next big problem to solve.
Yeah. I guess what I'm getting to is, there are a lot of founder-driven businesses where at a certain point of time, they have to find an executive like you. But typically, in your profile, you would have the opportunity to work for more established businesses, right? Many other opportunities. So what should you be looking for in a founder dynamic, especially with co-founders, which is very difficult?
Yeah. And I have worked with both of them very closely, much more so in the early days with Lottie, primarily from the fundraising side, and now more closely with Jide on the organizational side of things. If I were to sum it up, understanding the language that the co-founders speak in, right? So I spent a lot of time kind of observing, where are they at their best? How do they like to consume information? And then being able to meet them kind of at that level in terms of Lottie prefers to speak, whereas Jide prefers to read and kind of write down his thoughts. And so it may not be for everyone, right? That kind of ambidextrous flexibility to adapt to different styles. But, honestly, I think for most leaders in complex and multicultural organizations, that is a skill, whether it's managing up or managing sideways, your relationship with your peers or your direct reports. It is a skill, how do people best respond to the information? How can I most effectively get this message to land? Is it the type of form? Is the channel? Is it written? Is it spoken? And then it's having the best interest of the business at heart, no matter what we disagree on or, having difference of opinion or different perspectives. It is always coming back to what is in the best interest of the company. What are we trying to achieve? Let's realign on our overall objectives or overall vision and mission. I think having that strong ownership mentality is also really important. Being willing to challenge in a very nurturing and respectful environment, I think, is also important. I think it's having that right level of EQ and communication and managing that is very, very important. Yeah. So between 2020 to today, 2024, a lot has changed at Moove. For the benefit of those who don't know the full story of Moove, African-born startup, addressing, I guess, financial inclusion in a very different way through vehicle ownership and becoming sort of the provider for the big names like Uber. Tell us a little bit about where the idea started and how it has developed into this 150 million business on a recurring basis. If I were to kind of summarize all the different elements of how this came about. So actually the Uber relationship came through Lottie and Jude's previous business in outdoor advertising. So I think they were a customer on the outdoor advertising platform, so they had contacts within the organization. And then there were some conversations about, as you know, Uber is a marketplace, right? So it's two-sided. So we've got demand on one side, which is those of us ordering trips. And then the other side is most people think that it is drivers sitting in cars waiting to accept trips. Yeah. But actually in Nigeria, and as we've now come to find, in a lot of markets, that supply side is actually broken because you may have lots of willing and able drivers, but if they don't have access to credit, or because of the lack of access to credit, they don't have a way to get into a car, they can't actually work. And so I think identifying that problem or that broken link in the flywheel was really important in terms of developing the business model that where we are today, where we call ourselves a third side mobility marketplaces. So we enable, through ride revenue-based financing for cars, we enable drivers who are qualified, who are willing to work, to then have access to a car, to then be able to provide the supply on these marketplaces. And we've done this and adapted it to different market requirements. You probably are aware, in more developed markets like the UK, where we also have operations, and also in the UAE, heavily regulated, whether it's from a taxi ride-hailing perspective or whether it's from a financial services perspective. So we've had to kind of adapt our product offering in different ways. But ultimately, it was realizing that in order for these ride-hailing marketplaces to perform well, for their flywheel effect to take place, that supply piece is critical. And whilst they, the Ubers and the Grabs and the Bolts of the world are very good at building the marketplace infrastructure, the technology behind it that drives demand, that, matches demand and supply. The supply side is heavily operational, right? So it's how do we get the cars in the right markets at the right time? How do we fund the cars, to buy the cars at scale, to then put into the hands of drivers? It's highly operational, very complex, managing supply chains and those types of considerations. So for a player like Moove to take on that role in a way that ensures that that supply is then met is, I think, one of the reasons why we've carved out a very unique niche for ourselves. And it solves a problem not only for the drivers, gives them an access to a vehicle ownership, it also provides them with a sustainable job opportunity. So I guess take Nigeria as an example where vehicle ownership was the problem that Moove was seeking to solve, right? In the essence that, yes, we want to provide all these rides, but we don't even have enough drivers that own vehicles because they don't have credit to be able to buy those vehicles. What then was your solution? Was Moove, I guess, buying out fleets and then training drivers? Like, walk us through this, because I've seen different models actually. Being born in Malaysia, of course, seeing things in Southeast Asia as well, where things are slightly different compared to, as you said, developed markets. The way we started, we wanted to get proof of concept or product market fit, try and test it out as quickly as possible. So we actually started with used cars, and that was kind of bootstrapped. So we started with used cars, we got them on the road very quickly. And as soon as the cars are on the road, as soon as we put drivers in the cars, then we start generating revenue to be able to then see what else we need to adjust and adapt. And one of the things we quickly found out was used cars and the road infrastructure in Lagos, when you combine the two, meant that we were actually incurring much greater costs in terms of maintenance and repairs than it would be to generate sufficient revenues to then kind of make the unit economics work. So one of the earliest learnings was we needed to use new cars and we needed to be able to buy them at scale so that we can command the type of discounts to ensure that the cars were actually ultimately affordable. Right. So one of the most important things we focus on is affordability when it comes to product design, both in terms of the vehicle cost, but also the peripheral, right? So the service maintenance, repair costs, the insurance costs. So when we combine all of that together, plus the cost of financing, because we raise debt ourselves now to buy the cars, how can we make sure that this is as affordable as possible? Then on the driver side, we work with our ride-hailing partners, in this case, Uber. We have API access to the driver database. We're able to push out communications. So it's both proactive comms to drivers that may be looking to get into a new vehicle or get into a car for the first time. And then we run analytics on their performance history. So productivity data, like how many trips they've completed, lifetime earnings, cancellation rates, acceptance rates. And we combine that into understanding how likely is it that this driver will continue to perform at a level that is required to pay down the cost of the vehicle over time, right? So in most of our markets, our product is designed such that it's a fixed weekly fee. Right. And so as the driver starts to complete trips, say they do 8 trips a day, they work 5 or 6 days a week, the total earning, a portion of that will then go towards paying down the fixed cost of the vehicle. Everything else will be additional expenses, whether it's charging, in the case of EVs, or whether it's fuel. And then at the end of the day, we also benchmark to make sure that our drivers take home, sufficient income relative to the national minimum or living wage, typically significantly above that.
Yeah. And what surprised you from the data? I talked to some of my friends in credit scoring, talking about even just getting women, for example, the underbanked banks. Often the women surprises, right? Like they're the ones often paying down very quickly. They're very efficient with their money once they actually have the opportunity. What surprised you, I guess, in this field?
The data on women is definitely, it didn't surprise us. It came through very clearly in terms of driving behavior, right? Women tended to take care of their cars better, and they were much more vigilant about ensuring that, they went to their maintenance and service events on a regular schedule. Unfortunately, though, we still, due to cultural barriers, we still don't have as many female drivers as we would like.
What's the percentage out of interest?
It's about 2.5%.
Wow.
If memory serves me correctly. I mean, we have a pretty ambitious target of 50%. South Africa is our highest percentage. We have, I think, about 150 female drivers in total across Joburg and Cape Town. But yeah, it's been challenging in markets like Nigeria, Ghana, even the UK and India to recruit female drivers. They actually require a lot more flexibility. Typically, because of the flexibility they require, they need more time to pay off the cost of their car. So we're trying to explore in partnership with some of our lenders and also in partnership with our ride-hailing marketplace partners how we can meet that need. Maybe because we operate in so many different markets now, what's surprising is that there is no one size fits all. Maybe that shouldn't be surprising, but there's really no one size fits all. We've tried to classify our emerging markets into one bucket, but even then we put Nigeria into the frontier side of emerging markets, right? Because there's a lot more volatility, macroeconomic and sociopolitical challenges, and we would put South Africa, India, and even Ghana to a certain extent in more developed emerging markets where things are a little bit more stable. And so therefore, driver performance and driver kind of psychology is slightly different. Every market has its nuances. And even within, and when I say markets, it's cities, right? Because we operate in 4 cities in India.
And they're all very different.
Exactly. Yeah. So you have Mumbai, which is more migratory. So drivers will come in from the countryside during the peak season and they'll sign up for a car. Whereas Delhi, it's more residential, so people stay and they don't move around. And so there is a higher ownership mentality. So yeah, through our data, I think we've learned that customers, our drivers have lots of different preferences based on the city that they operate in. And we have to be able to very quickly adapt.
So on that note, I mean, emerging markets comes with it a very mixed connotation, right? We've had investors, frankly, who were burned many times over in different markets because they didn't expect the geopolitical risk, the currency devaluation, all the volatility. As the chief transformation officer in all these different markets where it is volatile,
yeah,
how do you plan for these instabilities? Can you even do that?
We try. Yeah, we definitely try. So I think it helps that, between myself, Lottie, and Jide, we've all had a lot of experience operating in emerging markets. Obviously, they've been operating on the African continent for some time. And it also helps that Jide, used to trade derivatives and currency swaps. So he was very well set up to think about how are we going to hedge all of our currency exposures from the beginning. So I can't take any credit for that. But I think it is coming to your, earlier question, like what are the characteristics and traits of like co-founding teams, as executives you should look for? Complementary skills, right? I think we bring different and highly complementary skills in terms of looking at these problems. How do we think about identifying potential risks? And then how do we think about mitigating and managing it? One of the reasons why, and people have asked this, investors have asked this so many times, like, why are you in the UK? We consciously and intentionally diversified as quickly as we did because we knew that diversification across the African continent is good, right? You're risk mitigating by spreading your risk essentially across many markets with different profiles. But it's actually even better if you can also add developed markets, which are more resilient. I mean, they take longer to launch, harder to manage, regulatory issues, but actually there are competition as well. But they're a bit more stable. So I think it is proactively thinking about that through diverse, voices in the room. I think it's also when you think about working backwards from where we ultimately want to end up, we always knew that Moove was going to be a global business. So it wasn't pie in the sky thinking. I think recognizing actually the supply problem exists in so many places. It exists globally. We knew we were going to be a global business. So what do we need to do working backwards to get there? We did have to make some trade-offs, right? We opened a number of markets which have since shut. So Kenya and Egypt are two examples. Being able to quickly pivot. So we've made the decision, didn't work. What was the reason? How would we learn from it? And then what can we do differently?
What were some of those reasons, if you can share, with Kenya and Egypt? I mean, I think the intricacy of diversification is challenging in itself, right? And again, then the narrative is, are you really building economies of scale? Because the UK and the needs in Nigeria are vastly different.
Yeah. In terms of why we closed down some of the markets, we did a lot of introspection last year, which was our year of transformation. This year was our year of delivery, but last year's year of transformation, we looked inwards and we said, we need to focus on path to profitability. And how are we going to get there? So what are the things that we know we're fundamentally good at? And what are the things that let's just be honest with ourselves, like we're not really good at this and we should probably just focus, right? So one of the things we recognized through diversification, we not only diversified geographically, but we also diversified in terms of asset class. So we had four-wheel passenger cars, and we also had trucks, heavy tonnage, low tonnage, and vans for last mile delivery. We also had bikes, ride hailing. And you know what? Our bread and butter, the product that consistently worked, was four-wheel passenger cars. Lots of lessons learned in terms of the other asset classes, whether it was because of the low value of the asset in the case of motorbikes, lots of other options for drivers to be able to get their hands on a motorbike. You have, losses and theft and damage. With trucks, much higher asset value. The existence of a strong marketplace partner was lacking, right? That didn't really exist. So we were trying to find, basically being the broker in terms of driving utilization on our trucks. And so a lot of those learnings ultimately made us decide, like, it's geos. And so it's actually geos and the asset type in combination, and also how mature and how strong were the marketplace partners, because ultimately we're relying on them for the accurate data. We're relying on them in terms of the demand, right? So if we're providing the supply, the demand has to be there on the other side. Otherwise, we're not generating revenues.
How long were you in Kenya and Egypt before you decided, okay, it's not working?
Kenya was a little bit longer. We were very excited about Kenya. It's not to say that we won't go back or kind of look at it again. We're very excited about Kenya because that is an area in Africa where there is a lot of electrification happening, right? So there is electrification of buses, electrification of motorbikes. So we are kind of observing and watching, and then again seeing, like, is there demand for potentially passenger ride hailing, or never say never. But we were in Kenya for, I want to say, maybe about a year and a half. Egypt, I think about a year. There were also macro and political issues at the time in terms of currency and capital controls.
Yeah, I guess what I'm getting to, it's sometimes with global expansions, it's kind of hard to sort of decide whether you're not in there long enough to power through, or it just isn't going to work. So how did you decide that? I guess with the team, what was the talent factor, the trigger that said enough is enough at this point in time before we revisit?
Yeah, multiple factors. So is the demand there? What's the strength of the partnership that we have? These are actually all the quite similar factors in determining whether or not we go into a market. So demand is really important. We look at vehicle supply. So how easy is it to get cars or whatever asset, whether it's bikes or trucks, how easy is it to procure? What's the supply chain and value chain to service? How developed is that? And then last but not least, funding. So how easy is it to actually get funding in local currency, preferably in that market, for us to then procure the vehicles to meet that demand? And so if multiple, two or more of these factors are not preferable or not, in the right place, then it's either not the right time to enter, or it's, cut our losses and actually refocus. And I think the final thing to consider is, at this point we were operating in India, which is one of our top kind of 3 markets in terms of total number of vehicles. South Africa is also quite significant. We had just launched in the UK and UAE. And so we were like, there are lots of other markets where there's vastly greater opportunity. I think it would be a mistake to kind of try and put too much emphasis on, at the time, smaller markets with a lot more risk than to focus on markets that were working and just continuing to scale up through those. And again, the focus is on profitability. So how can we get to profitability in each of these markets? If there's no clear path to that because of all these factors I've talked about, then yes, we would have to cut losses at that point.
So you talk a lot about dependency on demand, right? And of course, in the early stages, perhaps you might agree even till a certain point in certain markets today, you are dependent on the marketplaces to deliver that revenue. That demand then drives profitability so that you can focus on the supply side. How did you convert that early dependency on Uber into a strategic partnership where they've now invested in your success?
It takes time. As with all relationships, I think it takes time. It takes consistency in a partnership. You have to deliver. I think we've been able to do that over time. We demonstrated our ability to do that in some of the most challenging markets in Africa. It's a give and take, right? So because we've been able to deliver in some of the most challenging markets, we've also been fortunate enough to be given additional opportunity to expand into other markets. I was talking about being humble enough to recognize what we're good at and what we're not good at. Where we are very good at the operational side of supply, fleet management, driver management. Uber is exceptional at creating marketplaces and that experience, that customer experience. I think it's that perfect pairing of what they're good at and what they need and what we're good at. And actually it's very synergistic in that way. I think our Series B investment was a recognition that this partnership is working really well, and that if we're able to continue to focus on what we're good at, then we can do a lot more together.
So just to understand, Uber is one of your providers for your demand. You also work, I guess, in different countries with different marketplaces, whether that's Bolt, whether that's, Grab, and potentially in less developed, I guess they have driver services as well. How do you think about your spread, and how do you think about balancing that need for demand and yet the investment through somebody who probably wants exclusivity?
Exclusivity looks different in different markets, and oftentimes that's actually governed by regulation. So in the UK, for example, we cannot be mutually exclusive, right? There are other competitors that are also offering hire purchase cars to our, same driver base. So we cannot mandate that our drivers only drive on Uber. So that's in part regulatory driven. We haven't operationalized other partnerships, although in the past, as I mentioned, we had bikes, we had a partnership with Glovo. On the buses side, we had a partnership with Swivel. That was in Egypt. We didn't operationalize. So we do have flexibility there. But ultimately, the Bolts and the Grabs of the world will have the exact same issues when it comes to supply. And we know that in order to actually fulfill that supply, the capital requirement is significant, right? So it's not going to only be our opportunity. It's going to be the opportunity of other similar types of startups that are starting to pop up, right? That are either offering like rental or subscription offer, that are trying to tackle the same problem in slightly different ways. I think we're going to continue to do what we're doing and innovate. The market is plenty big for.
Yeah. I'm just like, thinking that my gears are spinning here as I'm thinking about the different permutations in every different industry. I guess, if I reflect and as someone who's tuning into this conversation, who's a founder building and scaling in global markets, I found it interesting that from day one, you knew you were going to be a global business and sort of built backwards. Whereas for some founders, a lot of them, because it's purpose driven or whatever, they almost, take the next step, and then lo and behold, it's a global business. So this was almost a reverse engineering of this business. What can others learn from Ladi and Jide and how you've transformed the company in terms of partnership with OEMs, right, with insurers, with the marketplaces, and how you strategically grown globally?
Yeah, so it wasn't all obvious to us at the beginning. I think with the ecosystem partners, so our OEM partners are critical to us, and we continue to build and develop new relationships every day. And the same for our lenders, right? So it's how do we add value? Because ultimately, if we can add value to each of these players in our ecosystem, then the more we can do together, right? And that kind of benefits everyone. And ultimately, we're able to raise more money, buy more cars, serve more customers to then put more supply on marketplaces. So it's a very powerful flywheel. So we try to think about it from that perspective. So what's in it for them? What's in it for the OEMs? What's in it for them through, many conversations of building relationships over the years? We know that consumer, in emerging markets versus developed markets may be slightly different, but we know that consumer consumption, so purchases of private car ownership, is declining in developed markets, right? So with a new generation, everyone Ubers or takes public transportation. You're so lucky to have that. And so private car ownership is declining. OEMs are looking for new distribution channels. How can they reach new potential customers that are not kind of for retailer or private car use? And so commercial fleets is actually a really interesting proposition. We realize that in hindsight, we were like, oh, actually, we could help them. And so what else can we do? What else can we do together? We can partner together to offer after sales, right? Because OEMs, what else do they provide through their dealership network? Not only do they sell new cars, but they also sell old cars, and they also provide after sales, right? Service, maintenance, and repairs, which is another revenue stream for them.
Yeah.
And what that gets for us, actually, it's always very synergistic. It's our drivers then are able to have a very seamless experience, right? So they go to the same showroom to pick up their car, and then they go back to the same warehouse or the same chain of repair shops to then get their regular 5K, 10K service and maintenance checks. And it's very professionalized, it's standardized, and that customer experience for us, for our drivers, also was a very positive experience. So talking about financial services institutions and how we partner with them, again, it's distribution channels for a new customer type that they would otherwise not be able to underwrite because they don't have the score. Exactly. They don't have the score. They're thin file customers. We have access to alternate data that can underwrite these types of customers. And actually, once we build that relationship, we can, in the future, serve, additional financial services products. So I think there is a win-win in this for everyone. And so although we are very much impact driven, it's nice to be able to not have to make those trade-offs.
Yeah, well, working in impact is not a concession, right? A lot of people think that even the work that I do, that, we'll see you later tonight, investing in women, we always say it's not charity. Investing in women is the greatest business investment you can make because they pay their debt on time, they're more careful with their vehicles, and they're trustworthy. So as you think about, it's interesting. I see the trends that you're picking up, right? Private vehicle ownership on decline, the need for more inventory essentially in certain markets because there's just no ownership to even begin with. What are the trends is Moove betting on? I guess EV is one of them, right? You've moved into that recently.
Yes.
Tell us a little bit about that.
We believe in a lower carbon, lower emissions future. In markets where there is EV infrastructure, we are rolling out with 100% EV fleet. So that's here in the UK, that's in the UAE. That will be the case in the US when we launch. In markets where that doesn't exist, we try and choose lower emission alternatives. So India, we have a fully CNG fleet, which is, I think it's about 2/3 lower emissions than traditional internal combustion gas engines. We're looking at converting our cars in Nigeria to CNG, for example. We're trying to do what we can to, depending on the infrastructure and the ecosystem that's available. And in markets where there is no kind of, alternative, it is choosing the most fuel efficient new vehicles to put on the road so we can minimize emissions.
And I suppose this is regulatory driven as well, right? Where the incentives and things like that for you.
Exactly. Well, it's regulatory driven, but I think there's also, commitments from our ride-hailing marketplace partners. So Uber has made a commitment to electrify their fleet for most of their developed market cities. So London, for example, I think is meant to be fully electric by 2025.
Oh, I did not know that.
And then you take
next year.
Yeah, next year. I mean, it's very important to set ambitious targets. And that is in combination with Transport for London. So the Transport Authority has also mandated that all new ride-hailing cars and that classification of private hire cars have to be electric. So it's both regulatory, and then as a result of that, our partners are trying to be at the forefront of their net zero commitments, which means we've got to be part of that. We've got to be part of that transformation.
Yeah. So as we look ahead here, I mean, we're coming up to time. What were some of the hardest lessons through this journey that you wish, I guess, Moove had learned earlier? I mean, hindsight's always 2020, but for a founder who's building and scaling, what are the most important lessons you think you've learned through this?
I think it's really important to have regular, ongoing, honest, open conversations with the executive team, with the co-founders in terms of what's working, what's not working, like regularly reassess. What do we do well? What do we not do well? This is one of the things I've learned reading and then putting into practice, right? So I think, again, Adam Grant's book, reassess everything, right? The pace with which change happens at a startup, especially in the early days, you've got to kind of look at your data. What are your numbers telling you? Is this not working? Peel the Band-Aid off and move on, and so that you can actually focus on what is working and do more of that. And I think part of that is having the right people around the table. You can hire brilliant people who have long-standing track records from much larger institutions, but may not have built and scaled at the very early stages. There are lots of different opinions and perspectives, and you're like, who's right? Who do I listen to? And so I guess being selective and careful and considerate about who's in the room when you're having these conversations about making these types of decisions is also a lesson learned. I think it's there's no black or white answer when it comes to people. It's difficult, but people is also one of the most challenging aspects, I think, of scaling, right? The people that launch with you may not be the ones that scale with you, may not be the ones that exit with you, and that's okay. It's sad, but they were part of the journey, and you thank them and you move on.
And how about from a fundraising perspective? I mean, you're chief fundraiser in many different ways, 250 million in debt and 250 million in equity. That's a ton of cash from really big names, right? Uber, MUFG, Speed Invest, of course, our friends, Palm Drive Capital as well. What has been your lesson in, fundraising effectively? I mean, part of what I'm passionate about is making sure that female founders get their fair share, and bias is very real. People say there's not enough women, but I always push them to question, why is there not enough women, right? Just to your point of like, why there are not enough women drivers, because they bear the majority load of the household, fetching their own children to places, which you did this morning, actually.
Yeah, I'm always in fundraising mode. And the way I think about it is it's a relationship. And one of my life's mottos is it's not a no, it's a not now. It's a not yet. Even if, an investor doesn't come in, it's not the right time, not the right stage. They could be the ones that open doors or introduce me to my next investor. So I spend a lot of time thinking about how I can build and cultivate relationships, keeping investors up to speed, both existing investors and prospective investors, keeping them up to speed in terms of what's happening, where we might need help, what are the most exciting developments and opportunities, so that we can create lots of champions of the business, which means when it then comes time to activate the fundraising engine, there's already an ecosystem of people who are familiar with what you do, who are excited about what's coming and the prospects of your business, and you're not starting from scratch. A lot of times it's, because founders like to build, founders, want to be in founder mode, not in fundraising mode. And so you're almost on the back foot when you're like, oh, shoot, I need to start fundraising. So it's always kind of thinking about what we can do to maintain those conversations, those relationships before you need to fundraise. And then specifically speaking about women, because we were talking about the sales muscle, I think women are great storytellers, but we tend to undersell ourselves when it comes to talking about the things that we're really good at or the things that we believe our company is really good at. Another area to focus on is actually just thinking about what are the stories that highlight those most important traits or characteristics, the problem that you're trying to solve, so that we can get around our own barriers that we create for ourselves, whilst ensuring that we're landing with investors and also generating that excitement and developing those relationships that we need to. It's not easy, but we know that there are lots of kindred spirits in the community. So I hope to see more female founders, also more female investors.
Yeah, capital allocators, because that's where it matters. Well, Tingting Peng, for telling your story and rising to the occasion. Thank you so much for spending your time here with us. And it's been such a pleasure to learn about your journey, the pivots, and, But still, the theme, I think, it's interesting that a lot of, I would say a lot of ENTJs, we kind of force ourselves to find a theme when a lot of others say, well, does there have to be a theme? Life is never like one path, right?
Yeah.
But it's nice to have like a consistent theme that you can answer to. But anyway, Tingting Peng, thank you so much for your time and for making your version of Billion Dollar Moves. We usually give a high five for all the great work you've done.
Thanks for having me.
And we got to see where Moove ends up. Thank you.
And thanks so much for tuning in this week. You can subscribe wherever you get your podcasts and follow our socials on Sarah Chen Global to get the latest on the show. It would really help me out too if you enjoyed this to rate and review our show on Apple Podcasts and share your favorite episodes with a friend. I'm Sarah Chen-Spellings and you've been listening to Billion Dollar Moves.